Everyone thinks trading is the easiest profession in this world. Trading is a very complex task. Unless you educate yourself properly, it will be nearly impossible to make a profit from this market. Even after following all the basic rules of trading business, the majority of the retail traders still lose money. Let's discuss the common reasons for which the retail traders are losing money in Forex. Hi guys, my name is Rity Godfrey. I am a professional Forex trader, and in today's video we'll be looking at the common mistakes Forex traders make. And the last is the most important, guys. So sit tight, let's get started. The first is not having a trading plan, which I have already highlighted in my previous video on the importance of planning your trades from daily to weekly to monthly. Okay, a trading plan in Forex trading is a set of rules that a trader follows when entering, exiting, and managing trades. So it outlines the trader's objectives, risk tolerance, and strategies for managing their trades. The plan can be thought of as a roadmap for a trader's career, and it should be reviewed and updated regularly, okay, to reflect changes in the market and as well your trading performance. Okay, a well-crafted trading plan can help a trader stay disciplined, manage risk, and make more informed trading decisions when trading. Making a plan to follow is really important. So guys, number 2 is paper trading for too long. Okay, paper trading is the same as demo trading, even though it's good to demo trade, but don't dwell in the fantasy world for too long. Okay, get into the real market and trade and analyze the market with your real money. Okay, analyze with your emotions on the line. That makes you stronger. Dwelling in the fantasy world will make you feel relaxed, and you won't learn because you will always say to yourself, it's paper money, it's not my money, it's broker's money. Okay, you should not dwell in that fantasy world for too long. And then the next on the list is trading the high impact news. You see, some novice traders always execute trades before high impact news. Okay, they think this is the only way to make profit from the market. They really do not understand this basis. But then news trading is for experienced professionals. Okay, it takes years of practice and complete knowledge of fundamental and technical analysis to filter out the best trades during the extreme market conditions. Now, being a new trader, you should stay in the sideline during the major news release. Okay, open a demo account to practice in news trading. Unless you feel comfortable with your demo trading performance, you should never trade the major news. So the next on the list, which is number 4, is trading against the major trend. Okay, every trader knows the fact trend trading is a good way to make a profit. I'm sure you must have heard this phenomenon: trade with the trend is your friend. But do you know the proper way to find the trend? Most novice traders analyze the market data in lower time frame and eventually lose a big portion of their investment. After blowing up their trading account, they blame the market. But if you analyze the market in the higher time frame, you will realize the fact you are trading with the market retracement. So stop thinking about the complicated trading systems, the indicators, and all of that to trade with the major trend. Okay, use the most recent swings of the market to find your trend line. Once you draw the trend line, wait for the price action confirmation signal to execute the trade. Okay, though this strategy is profitable, you still need to stick to the basic rules of investment. Never risk any money which you can't afford to lose. If possible, risk only 2% of your account balance, since it will help you trade the market in a stress-free environment. Okay, now number 5 on the list, guys, is not managing risk. Okay, traders should always manage their risk by using stop loss orders and position sizing to limit their potential losses. Technologies have made it easier to protect and safeguard your accounts. Okay, no matter how good you might have analyzed the market, you know the forex market is full of uncertainties. Okay, news may come up, market direction could change at any time, but by setting your stop loss, you would be protected, right? Someone just whispered that some news release does not obey stop loss. Yes guys, in rare cases some traders experience that. Probably traders who are not aware of the news events, or traders who are intentionally trading the news. That is why it is good to look at the economic calendar before the beginning of every week or every day, especially for those who are not ready to expose their capital to such risk. Okay, you can check out this video here on forex tools. Okay, I outlined the essential forex tools you will need as a trader and how to use them. The trading journal, the economic calendar, and others are featured in this video. All right, I will also provide the link in the description box. You can also check them out. And then number 6 on the list is not keeping up with the market news and analysis, right? Traders should stay informed about market conditions. So I'm talking to you watching right now, okay? You should stay informed about market conditions and trends in order to make informed decisions. Always visit and pay attention to an economic calendar. You can find an economic calendar on the Forex Factory and investing.com website, okay? The next on the list, I think that should be number 7, right? Number 7 is opening so many trades, okay? Guys, you will see someone open GBP USD, Euro USD, USD CHF, AED USD, AED CAD, Euro JPY, GBP JPY, Euro CAD. Oh my god, only one person. Tell me, how can you monitor all these trades, especially as a beginner? It all boils down to greed, okay? Because you want to grab every single pip in the forex market, except you are a professional trader and you're probably swing trading. It is better to open multiple positions on one trade, okay? That is on one currency pair, and monitor it judiciously. It's better that way than to open multiple currency pairs and distract your attention, right? I will teach you how to enter the market multiple times on a particular currency pair, okay? I call it riding the trend, okay? Riding the trend, right? So guys, that is for number 7. Do not open too many currency pairs, right, at a particular time, rather especially as a beginner. So guys, number 8 on the list is adjusting stop losses, okay? It's important to not adjust your stop losses when a trade is not working out, okay? Holding on to a losing trade in the hope that it will return around, it will come around and give you profit, to turn to profit, can lead to significant losses. And this is common mistakes that traders make, and this has to do with your emotions and psychology as well. But we're going to talk about that as we proceed. So sit tight as we proceed, okay? Do not adjust your stop losses, right? Next on the list, I really wanted to, dwell on this stop loss, but let's proceed. I'm going to do a clear video on that. I cannot emphasize the need enough to subscribe to this channel, guys. Ensure you subscribe. So the next on the list is over leveraging. Guys, leverage can help traders amplify their trades, but it also increases risk, okay? So it's important to use leverage wisely and not overuse it, okay? So just in case you are lost on what leverage is, somewhere around here is a detailed video on leverage, so you have a proper understanding and do not make the mistake of over leveraging, okay? So I will also drop the link in the description box. I really love to see that everyone is carried along in this journey. Do not over leverage your trades, right? Guys, number 10 on the list is keeping track of trades, okay? It's important to keep detailed records of your trades, including the reasons for entering the trades, the reasons for exiting each position, right? This can help you identify patterns in your trade and as well improve your trading performance. So ensure you keep track of your trading performance and do well to review them on a weekly basis, on a daily basis, on a monthly basis, as the case may be, or at your convenience. You can always do that. Number 11 on the list is ignoring risk management tools. So guys, there are many risk management tools available, such as stop loss orders and position sizing, okay, that can help traders manage their risk. So to make use of these tools to protect against potential losses. These are risk management tools that can help you stay profitable in the forex market, right? In addition to that, it's one thing to have risk management tools available, but it's another thing to actually use them, okay? So it's important to practice risk management consistently to ensure that you are properly protecting your account. I think I should create a video on risk management, because without proper risk management, guys, you will definitely be dabbling in the forex space. So if you would want me to make a video on risk management, just type Rity Trade Up in the comment section, and I promise to bring it your way, okay? If I can get up to 10 comments, I will drop the video ASAP. I mean, as soon as possible. And risk management. So if you want me to drop this video, kindly type Rity Trade Hub in the comment section, and I'm going to drop the video as soon as possible. Guys, number 12 on the list, I hope I've not missed my numbers, and remember, the last is the most important, okay? Number 12 is not learning from your mistakes. Okay, every trader makes mistakes at some point, but it's important to learn from them. By analyzing your trades and understanding what went wrong, you can improve your performance and avoid making the same mistakes in the future. So guys, the last and the most important mistakes traders make is being emotional, okay, which has to do with your psychology. Okay, sorry about that. Trader can be emotional, all right, especially when you are dealing with losses. So it's important to keep emotions in check and make decisions based on reasons and analysis rather than letting emotions guide your trade. So guys, the number one mistake forex traders make is letting their emotions control their decisions. I think I should make a video on trading psychology. Okay, you don't want to miss this. The most important aspect of trading is the psychology component. If you can't control your emotions, you will never be able to control your trades. Okay, the psychology of trading is just as important as the strategy you use. Okay, don't worry, as I'll be dropping this video soon. So guys, I cannot emphasize enough the need to subscribe to this channel. Again, I cannot emphasize enough the need to subscribe to this channel. Again and again, I cannot emphasize enough the need to subscribe to the channel. Do you know why? Because I have loads of valuable content to keep you connected to what. But guys, why have you not subscribed to this channel? Please just give me a thumbs up and subscribe to this channel. Okay, so guys, these are the common mistakes made by traders, so it's always important to note them down and try as much as possible to avoid them during your forex journey, right? Did you get value from today's video? If your answer is yes, kindly hit the like button, subscribe and turn on post notifications to stay updated when I post a new video. More so, you can join my Telegram community using the link in the description box below, where I share a lot of valuable content as well as winning signals. Okay, thank you for watching and I'll see you in my next video. Peace.